Is Donald Trump purposely trying to cause a recession? That is what we are going to be breaking down in today's video, as I believe we are about to see the greatest bull run in all of history. As you guys know, the media is making it out to be that Trump is terrible for the economy, that they're going to be sending us into a recession, and that they're trying to manipulate US economic data to gaslight the American people. Well, I'm not only going to show you why that's bullshit, I'm going to be using that very argument against them and why Donald Trump cares about one thing and one thing only, and that is wealth. These people are mad. They are furious at the government right now with what's taking place with Doge. People are revolting, calling this resistance is what CNN labeled this as, saying that Donald Trump and Elon Musk were going to cause the United States to dip into a recession. And the truth of the matter is that what Doge is doing, what the government is doing in terms of fiscal policy, is actually working inside and in suit with the Federal Reserve, Jerome Powell. Because there is one solution to all of this. There is one solution that will cause and relate to booming markets. If you've read any textbook, any econ textbook, you would know that the answer to, of course, increasing spending into the economy is by reducing one thing and one thing only: interest rates. We have to deleverage from the government and re-leverage our entire private sector. The federal debt right now is at an all-time high, roughly $36 trillion. And in terms of percentage, that is like 210% of our GDP in the United States. And is why Scott Bessent, the US Treasurer, came out on March 6th and gave his remarks at the Economic Club of New York of what him and alongside, of course, Howard Lutnick and Donald Trump's administration are going to be focusing on in the short term to give us a long-term or even midterm economic boom. Starting off by saying, first, I will address the critical aspect of our domestic economic agenda, responsibly deregulating the financial sector to accelerate what we call a re-privatization of our economy. Second, maybe some of you have an interest in this. President Trump's tariff policies have begun the process of reorienting our international economic relations. I'll review our broader international economic policy goals from our first principle basis and discuss how tariffs fit into the picture. Lastly, economic security and national security are inseparable. At the Treasury, our unique financial tools are a critical component of U.S. foreign policy. Now, specifically, he states regulations should serve to ensure the safe and soundness of U.S. banks, drive affordably across goods and services, and facilitate economic growth. And we are going to accomplish this by improving the efficiency and effectiveness of our financial sector to underwrite and finance domestic activity, deleveraging the public sector, and re-leveraging the private sector begin, and end with, of course, smartly reinvigorating our regulated financial institutions. And they're doing this by attacking the 10-year Treasury yield, which is an economic benchmark for most of your debt that is in the United States. Auto loans, mortgages, tax cuts, deregulation, cutting government spending through Doge. You see, while this might cause a short-term uptick in unemployment from the government, of course, as we lay off hundreds of thousands of workers federally, that may be connected to waste, fraud, or abuse. I'm not the moral police. If you want to be the moral police, you can do so in the comment on whether that is good or not. However, this isn't like Trump's the first one to do this. In fact, this is a very democratic thing to do. Bill Clinton was the first one to do this in the 1990s. And then, of course, cutting Medicaid and cutting government costs is a thing Obama wanted to do, and especially Nancy Pelosi back in like 2010. So we know this is nothing that is out of the ordinary, but what we do know is that all of those people that do work for those government jobs, which are a net negative on the economy, the government doesn't produce, are going to now have to be forced, and that is unfortunate. I am not here to say that's not unfortunate, to go work for the private sector. But that in itself is a very bullish net positive for the economy, because as the global money supply increases, as China prints, as Europe prints more money than ever right now, and if you guys aren't aware, China's printing roughly $1.4 trillion. Europe has been in devastations and recessions nonstop, and the United States, guys, the Federal Reserve is looking to start reduce their interest rates again, or start cutting again by June at the latest, which would tell us that interest rates are going to start dropping, which means liquidity and borrowing for the private sector is going to be cheaper, which is going to incentivize spending. It's going to incentivize growth, meaning all of the unfortunate jobs that are being lost currently today should be picked up within the following months.
I want to give a quick shout out to L Bank Exchange. It is my favorite exchange to get all of the latest trading pairs, all of the hottest meme coins and altcoins. You can go to the spot trading, or you could do futures perpetual trading. And we have a link down below with the tutorial on the top of our page. Tons and tons of features here, 24/7 customer support, huge reach here, huge volume, millions of users, and they have over 200 countries and regions covered. So go ahead, open up an account, deposit some funds, and start your trading journey.
So is Donald Trump purposely trying to start a recession to reduce those interest rates? The answer is no. Donald Trump and Scott Bessent are trying to tackle the one thing that they can drive down that will get the Fed to cut interest rates, and that's inflation. As you guys saw within the first 5 weeks, we've seen gas prices, eggs, groceries, etc. all come down, and inflation is starting to ease as job creation is starting to soar. Now, whether or not job creations continue to soar, that is going to be the question over the, of course, regards to tariffs and the investments coming to the United States. These manufacturing jobs, are they going to start instantaneously, or are we going to see kind of a pause here until these facilities start getting developed over the next 6 to 12 months for short-term facilities, or long-term for 2 to 5 years? My best guess is 6 to 12 months. I do think you're going to start seeing that economic expansion. But none of these data points, guys, scream a recession. Am I anticipating, and this thesis that I'm breaking down in this video today only becomes more correct on March 19th if Jerome Powell switched to a dovish response. They haven't been cutting interest rates because of the strong economy that we've been in. But now with a strong enough pullback, with a strong enough correction within the stock market, we very well could potentially see that first reduction as the CPI report came in way lower than expected alongside the PPI. The ultimate goal here for Trump, guys, isn't to derail the economy. He is from the private sector. He wants wealth. He wants stock market go up. And when M2 money supply, when the global liquidity is increasing and interest rates are dropping and the US 10-year treasury starts to fall, that is when you're going to see risk on assets absolutely crush it and start to perform. Which brings me to the point of this video, guys. Bitcoin is now down roughly, 20% from its all-time high. It dropped down 30%, still down 22% today. Now is the time to start dollar cost averaging into your favorite blue chips. I don't know if the bottom is this week, if it's next week. Who knows if there is one more 10% drawback. But what we do know, inflation is coming down. The labor market and conditions are strong. Our economy is in a good place. Liquidity is increasing. Interest rates are coming down. None of this screams economic contraction. It screams economic expansion. Now, if you don't believe this is how this is going to play out, let me know the reasoning in the comments below. If you think a recession is coming, explain why. I seriously would love to hear the opposing arguments. But right now, we are with Scott Bessent. We have Howard Lutnick. This is the next 4 years of the administration. And with the Federal Reserve right now, Jerome Powell, we know he believes if you reduce interest rates, that increases spending. And if that's the case, we are right now either weeks away or months away from seeing reductions in interest rate and expansion in economic growth. And while short term, that has caused a lot of pain. Subscribe to this channel, guys, because I think these markets are just getting started.